Tensions between Israel and Iran have sent shockwaves through the markets, with oil prices swinging sharply in recent weeks. Over the weekend, the U.S. launched Operation Midnight Hammer, targeting Iranian nuclear sites, raising fears of a broader conflict. But news of a ceasefire quickly followed, pulling oil prices back down. I'm Johanna Bota, and joining me today to discuss what this all means for markets, energy, and geopolitical risk is StoneX's Chief Commodities Economist, Arlan Suderman. Always a pleasure to have you on, Arlan. Let's start by talking about oil prices, which have been highly reactive to the recent escalation in the Middle East. But if you take a step back and look at a long-term chart, Brent, for example, the overall trend is still down. In fact, Brent hasn't broken a new high since October 2023. So is weak demand still the real story here? Because it wasn't that long ago that recession fears, not geopolitics, were driving the market.
Oh, weak demand is certainly a concern going forward, particularly depending on how the tariff war that President Trump is waging plays out. But another concern on the other side of it is supply. We've seen OPEC Plus decide that they can take advantage of the current situation of low prices and increase output, taking market share back away from the U.S. shale oil fields. And so they've been increasing output on a monthly basis by about 411,000 barrels per day. So as they increase output at a time when demand remains soft, that keeps downward pressure on the prices when these geopolitical tensions are not present. So how that all balances out going forward is interesting. I think if we look at how the crude oil market reacted after it took the war premium out, it found some chart support at the top of the previous trading level. Perhaps that indicates that the market thinks that we're going to go into a period of growth now to increase demand sufficiently to balance out with the increase in supply.
So you just mentioned OPEC Plus and their decision to boost production. Now, they've been pretty quiet since tensions flared up in the Middle East. Would you expect them to revise their strategy given the most recent geopolitical developments over the weekend?
Well, I think that's being discussed among their members, whether they should or not. We anticipate we're going to continue to see sanction enforcement limit the amount of oil available from Iran. And we're seeing some other OPEC plus countries having trouble increasing their output to levels, while others had previously been cheating their levels higher, having to kind of follow the tighter restrictions now of the cartel. So I think they're going to be closely monitoring how the world responds to this, what happens with the tariff war, particularly as we approach the July 9th end of the 90-day pause on reciprocal tariffs as they look to make their decisions. But overall, I anticipate that OPEC Plus still wants to increase output because they want to increase overall revenue and take market share away from the United States. Russia certainly needs to have higher prices because it has a high break-even level. But at the same time, if it can't get the high prices, it would like the revenue to fund its war from more barrels.
Okay, let's concentrate on Russia for a moment. It's no secret that their economy leans heavily on oil exports. And we also know that they have a break-even price estimated around $77 a barrel for 2025. Do you think a prolonged conflict in the Middle East actually plays in Russia's favor?
From the standpoint of maintaining higher prices, it certainly does, because that helps it get the increased revenue that it needs to fund its war. But at the same time, the longer this conflict would carry on, the more Iran becomes weakened, and Iran is a critical partner to Russia and to China. And so they've kind of got mixed objectives there. They want to see Iran maintain a sense of strength, which now tends to be, it looks like it's weakened dramatically. And Iran supplies many of the missiles and the drones, so to speak, for the war with Ukraine. So maintaining a high price has kind of worked against Russia from that standpoint. Now that prices have broken lower again, as an apparent peace is breaking out in the Middle East, Russia is still faced with pumping the oil at a higher break-even cost, but at the same time, it struggles to shut down its production, particularly as you go into Siberia. Many of those wells, if you shut them down, it can take many years to get them going once again. So it's going to be pumping oil. It would just as soon have the ability to pump that oil and get the volume of oil and then hope for higher prices down the road.
I see. Well, before we let you go, one last thing. Beyond the big headlines, are there any less obvious trends or developments in the energy markets that we should be keeping an eye on in the months ahead?
Well, I think that one of the big ones is overall China's economy and whether it's able to recover or whether it's able to get its economy going once again. It's just announced another round of about 19 stimulus objectives to pump money into its economy, focused on consumer buying. It's trying to shift its economy from an export-based economy to a consumer-based economy. That's a very difficult transition to make, especially when consumer sentiment is near record low levels. So it's trying to turn around consumer sentiment. Whether it's able to do so or not, I think is questionable. If it is, then that boosts energy demand dramatically for the global balance sheet. If it's not, then it's going to be dependent on U.S. Demand. Now, one of the things that I think is fascinating as we come to the end of the 90-day rollback on the reciprocal tariffs is basically the U.S. economy is now growing at a near trend level. We have segments that are really struggling, but the overall economy is learned to live with the status quo of the 10% across the board tariffs with minimal growth in inflation to this point. What if President Trump's strategy is, as we get close to June 9th, is to extend that by 1 year? That would remove a great deal of uncertainty that is holding back both consumers and businesses from investing in the future. And we could see a tremendous amount of stimulus growth in our economy if that were to happen, particularly if some of the stimulative measures of the tax bill are passed. Then we could see that growth to increase consumption for energy coming out of that, if in fact that is President Trump's strategy.
We'll be keeping an eye on those developments, Arlan. Always good to have you on. Thank you so much for joining us, and thank you for watching. For more financial content, don't forget to like and subscribe to our channel.